Here we go. All right, stocks by the numbers. Welcome back. I wanted to do a quick update on two stocks, and they just reported earnings. I know one reported the other day. I didn't do a quick update, but I was actually curious to see how it would perform over around the next day or so after reporting those earnings. So let's get into it. First company I wanted to look at, Celsius Holdings, symbol CELH. And I'm sure this stock is probably trending now all over social media because people are seeing the after hours pop. Stock closed at about 25.5, was down about half a point, 2% going into the earnings. And if we check the numbers here, we can see that we were expecting about 11 cents a share. The company actually reported a loss, missing on the EPS side, but the revenue came in nice and strong above those estimates. 327.85 million on the estimate. Company reports 332.2 million. So the demand is still there, right, that we used to speak about, and we know we kind of forecasted several months back when we heard the news about Pepsi, right? We kind of knew that, hey, listen, it could get rocky maybe for the next couple of months. It might take like a quarter or two, but as long as the demand is still there and we keep an eye on the revenue and make sure, that doesn't start chunking down and falling off a cliff, then technically, we should be all right. And the last time we looked at it, I believe it was kind of around this time when we were in this wedge, and we looked at it maybe in the 30s or like the higher 20s. And I know in the numbers, that's basically what I said, in my opinion. I said, it could get rough. We technically had an earnings miss back in the first week of November, and we knew that we could get rough. People may kind of just focus on the Pepsi news, and we may continue to drift down. But overall, in the numbers, it did look attractive to me. And over the longer term, I had confidence, let's say. So really, if you bought even back here with this move after hours, you can see, you're now break even or you're even potentially green, even if you bought back at like 32, 33, right? You're up a couple of points right now. So most of you probably purchased this for the longer term. So I will say, in my opinion, probably going to be okay. Anyone who, again, I know we were speaking about the wedge. As we started to break out here, I had one or two people in the Discord reaching out saying they had some calls. They're up a couple of bucks. What should you do? Do you think it's going to go up? And unfortunately, it was hard to call. And I thought it would continue to kind of slowly climb or at least flatten out going into these earnings. But obviously, that is not what happened. We continued to chunk down. And just again, to regloss the situation, we kind of know that CELH is a pretty decent story, right? The revenue has been pretty solid over the years. And the main concern was RFK. That's what I always mentioned. And that still remains on the table. That still remains on the table because you never know what's going to happen. But they did really beat this up. And the stock, again, basically $100 coming all the way down to new lows recently back at 21. So, we had a high short interest, and we had the news today, as you see, that they are looking to acquire Alani Nutrition for roughly 1.8 billion. And of course, initially, we had the drop. And it's interesting, right? Because a lot of traders may have heard the news and immediately began to exit the company just off the sole fact, while they're spending, 1.8 billion. So usually when a company spends money, the stock price will go down in the short term, right? We spoke about this in the past. If we're talking about like an acquisition, you technically want to own shares of the company being bought out, not the company making the offer, because they're the ones paying out. And you see this, of course, with other stocks like VZ and PM, these good dividend players. When they pay out the dividend, the stock usually takes a little bit of a dip because the company's paying out money, right? So it's technically worth less. But anyway, going off on a tangent, as I always do. The after reaction, as it was digested, then we had news, of course, that the company beats on revenue. But I think overall, this is more of a story of, this other business was taking market share, encroaching essentially in the same space that CELH is in. 1.8 billion realistically is not a lot of money. We know the company was holding a decent amount of cash, if memory serves correct. Let me see. Yeah. So, as of last quarter, again, we were talking about virtually no debt, right? The company was operating at profits. Revenue was holding steady. It was climbing nicely over the years. And essentially, they had half this amount, if you look, in cash. So that's what I mean. It really wasn't like a big blow to the financials, if you will, for CELH to make this acquisition. And now we essentially kind of go down the road of if you can't beat them, join them, right? Almost similar to what we saw with Fubo, right? Encroaching, taking that market share, growing nicely, law battle with Disney, and Disney says, you know what? Here's a check for a couple of $100 million. Why don't you just come on with us and we'll just work together and just, grow it together. And there you go. And that's essentially what I feel CELH did here with this other business now. They basically said, hey, listen, we're in similar spaces. They're encroaching on our market share. You know what? Why don't we just absorb the business, eliminate them as a competitor, and have that revenue coming in now as well, and we increase our market share, right? Because now another one or two, honestly, I didn't look into this business, but I'm sure it's valuable and people are buying their crap. But, now there will be another 1, 2, 5 options on the shelves that are under our umbrella that we're going to get from the consumer. So that's why I think, again, you had the initial shock and then everybody was like, no, you know what? This is going to be massive for CELH. And if we pull up FinViz real quick, bear with me, CELH, we can see, ooh, baby, bring this down for you. Look at this. Short float, 22%, right? So you have kind of like a perfect storm of everything taking place right now. You have something that was initially viewed as a negative that is now viewed as a positive. You have a situation where even while making this decision, the company, while posting a miss on the EPS side, was still able to maintain their market share and generate enough revenue to beat estimates, right? And you have shorts potentially now rushing to cover the position. And there you go. Now you have a stock up, 30, 40% after hours. Little extreme of a move, maybe to some of you, but again, this stock was really beaten up. And that's why when we were looking at it in around this price, like the low 30s, the high 20s, we were looking at the numbers and a lot of you were agreeing with me saying, no, this one looks good. I think I'm going to take a position. And obviously, as you see, the stock ended up rejecting and dropping down even harder to the low 20s. So a lot of people who agreed with me here were down 30%. Probably wondering what's going on. Do I cut the position? I don't know. Should I add to it? Like how are the earnings going to look? And now, boom. Basically back to where it started. And again, if you got in several months back, you may now even be green. So very happy for all you shareholders. But it came up almost to right here. See this candle right here? And if you see top left of the screen, the low 36.17. And I was going to say, in my opinion, that's probably where it may pause, maybe run into a little bit of a resistance, not necessarily reject, right, but might just hang out and pause there. And the stock hit 36 even and is now slowly stepping down, but for the most part seems to be on the up and up, right? We had the pause right here. What is this? 29.70, 29.68. That's close enough. But we can see if we do that, right, technically we just drop down below our support, so we could maybe even see a retest down here of about 33.25, very high 32s. See that tiny gap right there, about 32.90, 32.93. Pop, bang. That could potentially be coming. And if we look at stock charts real quick, we can see that we have more action in the higher 30s and even into the 40s. So as this stock started to chunk down, and then we had that diagonal kind of wedge move, get out of here. We had that diagonal kind of wedge move. Now you can see that we could potentially begin this bounce here, right? And make our way back up and mostly reclaim even a lot of that value lost. I'm not saying it's going to go back to 100. Right? But if we can get back to that 40 plus level, that'd be a nice return probably for a lot of you who stepped in over the last couple of months. The MACD was on the up and up. We can see recently we started to pull back, but we didn't even try to test, and we just bounced. Had a nice day here. I'm sorry, we're looking weekly. Had a nice week here, up 14%. But the RSI here on the weekly, we can see a touch below 39. So that's why the 200-day here at 37.99, easily possible, easily feasible to get back to 38 in my opinion, if not higher. And if we switch over here to the daily, we can see, look at this. You'd have to go all the way back to the beginning of June before this company was above the 200-day moving average, and has basically been beaten up the entire time since then. But now we have some good news, right? And the stock, where are we? 34 right now. So that's like here, but we hit 36, right? So that's like here. So that's like there. In my opinion, again, it just popped big, right? So we can potentially open up here at 34, 35. The Johnny-come-latelys may see it trending. They'll jump in. The added volume may run it up to 36. It might even spike straight up to that 38 range. And then the rejection and the sell-off might take place, pulling it back down to the low 30s. And then it might hang out for a little bit, believe it or not. And then I think over the next 2 weeks, again, I'm trying to be realistic because we know if people really see a stock trending and feel like they missed out, we know that, you know, the price areas that we may predict, you know, they can happen within a day or two when we say, oh, maybe give it a few weeks. So sometimes the timing, you know, it's up in the air. But realistically, probably over within the next, I'd say, week and a half, 2 weeks, this stock should really get back above 40 plus. And that's why a retracement back to this 200-day 4180 really doesn't seem like an issue. And if we back up here, let me see, 4180, like around there. Yeah, so that's like right here. Right? You can see high there, 4150, 4139, 4157, 4183, 4163. That hit 42. But you can see a lot of action right there at around the 4180 level. Right there hit a low of 4196 before gapping down and then trying to come back and retrace and then reject it again. So, in my opinion, I personally see it going back to 40 plus. And RSI, even on the daily, even after this run-up over the last couple of days, RSI was sitting at a sub 55 going into earnings. So, of course, that's going to tap out at 70, 80 when we open, chances are. But let's check the pivot points real quick. I'll let you go. Yeah, we're at, what, 34? Yeah, so we broke well above these previous first and second level resistances, excuse me. MACD up. Now we're like here, but we hit like 36. Was this previous? Let's see. That's about 35.50. That's about, yeah, 35.87-ish. Yeah, so maybe, yeah, the slight break up above these previous resistance levels in the 35s, right? Touched it to the psychological level of 36 and then started to bring it back down a little bit. But, yeah, this previous pivot point looking like around 40.5. This one here, 40.33. Even this down here, 39.08, right? So that's why, in my opinion, it kind of looks like the writing's on the wall that this stock should easily run back up to 38, 39, 41, 43, right? Potentially break up and then come back down maybe and retest the moving average. But you guys understand what I'm saying. Let's look over here. Okay. Yeah, and you can see where the stock came from. You can see how much higher our pivot points are. And of course, the lower support was $2.81. That was a little extreme. But we can see we have a pivot point here at right around 51.25. But again, the moving average here back to about 38. We have the other moving average, 41.80. This moving average, the 50-day, will slowly come back down. So maybe you can see even like 45s potentially. But again, chances are, in my opinion, it could come up and then it could maybe bounce in between these levels, right? Tighten up, consolidate, and then take that next leg higher to the mid-high 40s and potentially get back to the psychological level of 50. In my opinion, I do still like it. And I think this acquisition, while technically is, money flowing out, I feel that it is good news. And I do understand why the stock is responding positively. We're acquiring. Everyone just talking about the deal. Fourth quarter loss. Here we go. Full year revenue 1.36 billion reflects growing consumer demand for better for you functional products. Celsius retail sales increased 22% year over year, and category market share grew 160 basis points to 11.8% in 2024. Right, acquiring combines two growing, scaled energy brands with clear category tailwinds. 6 p.m. call. And we can see technically revenue down, right, but still kind of holding that market share, like we were saying. As long as they kind of maintain that revenue, and of course, technically they came in a few million above estimates, that technically is a good sign. But again, anyone who was worried about them potentially starting to see a drop in revenue, losing market share to competitors, as we said, if they now made this acquisition, they now just increase their market share massively. North America segment, as you see, down roughly 20 million from this quarter last year. International climbed nicely though, went from about 14 to over 20. Gross margin up very nice, about 2.5 points, 47.8%, now up to slightly above 50 at 50.2%. So a lot of these are good, and you can see a loss here of about 19 million. That time last year brought in about 50. So again, kind of a mixed report, but as we say, a lot of these stocks, for the most part, are supposed to trade off of future value. So that's why, based off of the move they made, I think there's future value there. They're increasing, okay. Ensuring that Celsius is available in more places to meet demand. Acquisition will further strengthen Celsius' position as an innovative leader. Quote, we are pleased that our strategic initiatives are driving long-term share gains and strong retail sales growth. For the full year, revenue increased 3%, and we expanded our gross margin 220 basis points. We are investing behind our growth through targeted strategic investments in vertical integration and capital-efficient expansion. We are also excited to announce the acquisition of Alani New. It's aligned with our vision. Right, yeah, revenue down, technically above estimates. Higher domestic allowance, number of programs. The international sales numbers up are good, right? Because we saw the massive growth in demand and revenue to come in and start chunking in from here in North America. So now if we're expanding internationally, but those sales and popularity continue to slowly inch up as well, then this could be a good recipe for success. And again, will it get back to 100? I mean, of course it could. You and I both know that. But realistically, even 40, 50, I personally think really shouldn't be an issue. Recent expansion launches into UK, Ireland, France, New Zealand. Beautiful. International markets increased 8%. Expenses increased, driven primarily accrued legal expenses. Everyone gets sued for everything. I love it. We're reading. And of course, 1.8 billion. All right, that's enough, because I wanted to quickly look at Safe Bulkers as well, who came in, as we see, bringing in 15 cents a share. Analysts expecting 14.3 cents. Revenue comes in 71.5 million roughly. Analysts expecting 70.16 million. Stock initially kind of dipped down a couple of cents here, 363, 364, and now we see climb back up here into the 380s, closing at 381, up about 3.25%. In my opinion, I do still think this stock is undervalued, and we can see that we were kind of in this wedge that we kind of spoke about, and then we dropped down out of it, and then we started to gain momentum here with earnings. So chances are, in my opinion, probably going to get back to this bottom trend line here, about 388, get back in range. $4 shouldn't be an issue. And again, coming back mid-range, 428, again, really shouldn't be an issue as well. Stock was up here at 6 1/3 at the highs, and I think it's worth even more than that. And we looked at the book value and the financials last time, and we can just quickly go over, as you see, as of last quarter, book value was sitting here at $7.73. Stock currently trading sub $4 a share. And we also spoke about the share repurchase program, and the company pays you a little dividend to own it. Maintain buy at Jefferies, $6 price target. Okay. They declared their dividend. And again, technically, as we see here, revenue down from last quarter to 71, but technically above estimates. Again, holding that positivity. Daily vessel operating expenses actually came down. Usually lower in this quarter, though. But we spoke about the fact that they were adding new vessels, right? We were getting, I think, one here coming in 25. We have like another two coming in 26. And we were also speaking about, number of vessels slowly going to get up to probably 50 over the next 2 to 3 years. Look at the debt per vessel down. That's the lowest it's been. And of course, we spoke about the average age of the fleet the last couple of quarters. And again, you can see 10 years or less usually on average. And I know people were saying like, oh, well, what about tariffs and whatnot? And granted, that is a warranted concern, if you will. But just like if you think about what happens here in the States, as gasoline prices went up, right? We said that it cost more to pay the truckers and our transporters, and that's what helped lead to higher costs passed down to us, the consumer, as well. So I'll say the same thing even with these, mass bulk import and export businesses as well. These shipping companies, even if it may cost a little bit more and the costs go up, remember, chances are they're going to get paid. The people involved in the actual logistics will have the business and will more than likely end up getting paid no matter what the expenses or inflation or tariffs do. And again, if the tariffs are applied, then as the goods approach the shores, that's when they're going to get taxed, and the consumer probably will end up eating the difference, right? It's not going to be the shipping companies. That's why I feel, in my opinion, even though this is a smaller international company, I do think it's undervalued. And even going back to from this level, even at 380, if you were never involved in this, right? If this goes back to $5.5, $6 a share, you and I both know that's going to be a phenomenal percentage return for you. So something to keep in mind. I do still personally like SB. I own a handful of shares, nothing too crazy, of course, but like I always said, if I say I like something, I will always try to put some of my money where my mouth is when we speak about it. And we can see too, we had this nice bounce off the 50-day running into earnings, and we can see today we got just at the top of that Bollinger Band here, 380, stock closed 381. So that's why, even again, like a retracement here back to the 200-day moving average of around 460, I really don't think is asking for too much, especially after another earnings beat. We can see the MACD started to soften a little bit, but then had a nice curl into earnings and is staying up. RSI on the daily sub 63, still have more room to go. We could see 4, no problem. Mid Bollinger Band 384, stock hit 382 this week. So in my opinion, it gets above that, and again, goes up to 4. And also we were looking at what, like 4.5, 460? And you can see here on the weekly, look, you have the 50-day moving average at 460. You have the top Bollinger Band at 456. Right? So we have a good argument for about a 20-25% move here, perhaps over the next week or two. And of course, let's not forget that on the weekly time frame, the MACD just crossed to the upside. And even though it wasn't a blowout report, we technically beat earnings again and are holding steady, right? So in my opinion, I do still like SB. I really like it at this price. 44.25 on the RSI, right? So again, over the weekly time frame, the next week or two, climbing it back up to 4.5, that really isn't overextending many technicals, right? You understand what I'm saying? So it really shouldn't be an issue. Let's check the pivot points here. Again, this is just my opinion. Whatever you do with this information is entirely your own prerogative. Well, you can see a pivot point here at 438, a previous one looking like about 430. So again, that should be a layup in my opinion, kind of helping my argument a little bit. And even here, second level resistance on the daily, you can see 396. And that's where it previously was. And the month before that in December, you can see pivot point essentially right at around $4 a share. So in my opinion, that's the next stop. And then, of course, we're slowly going to make our way back up to the mid-high fours, in my opinion. And let's check out of curiosity. Also, I've been talking about safe bulkers for quite some time, and someone mentioned to me that maybe someone on Reddit mentioned it. I don't know. So that's something to keep in mind as well, right? If we build a position and accumulate shares now, not only do I feel personally we're buying like a $6, $7 stock for half the price, that also pays us a dividend. But more importantly, if we know, again, the power of social media, so if all of a sudden now those people in those forums start talking about SB, they're technically going to be Johnny-come-latelys, right? Because we knew about it for a year and a half. But that, of course, would not just help the situation. But yeah, short float here about 2.5% on SB. So not necessarily a squeeze play, but in my opinion, definitely a growth play. I just want to see. Right, and this was the share buyback that we spoke about last time. Safe Bulkers said Monday. Again, this was back last quarter. In November, approved the stock repurchase program to buy back 5 million of its shares. Company said it plans to fund the repurchase program with its existing cash source. So they have the cash on hand to buy back 5%, 5 million of its shares, which, as you see, with a 58 million float, is a decent amount. And the beta is slightly less than 1, holding 1. Again, the beta volatility of a stock in relation to the overall volatility of the market. Dividend yielding over 5%. PE 4.5 sub. Market cap only 400 million. Just brought in 70 for this quarter. Right? It's slightly been weakening, but it's still holding. 300 million in change for the year. Market cap 406 million. I think I said all I need to say, and I will end it there. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.